Now speaking, Spencer Wang, VP of Finance. Welcome to the Netflix Q2 2023 earnings interview. Co-CEOs Ted Sarandos and Greg Peters, and CFO Spencer Newman are joining me, Spencer Wang, VP of Finance, IR, and Corporate Development. Our interviewer this quarter is Jessica Reif-Ehrlich from Bank of America. Bank of America Merrill Lynch analyst Jessica Ehrlich inquired, what are your views on the impact of not one, but two strikes on your business? How far out does your original content extend? How much of the content spend do you expect to be pushed from 23 into 24? Ted Sarandos replied, thanks, Jessica. Good afternoon, and thanks for the questions. Let me start by making it clear that this strike is not an outcome we wanted. We are constantly negotiating with writers, directors, actors, producers, and everyone across the industry in order to reach an agreement. On a personal level, I was raised in a union household and understand the financial and emotional toll a strike can take on a family. Nobody here, or at SAG or WGA, took this lightly. We have a lot of work to do to resolve a handful of complicated issues. We are committed to getting to an equitable agreement as soon as possible, one that enables the industry to move forward. Bank of America Merrill Lynch analyst Jessica Ehrlich inquired, what is the current status of your original content production? Ted Sarandos replied, we are committed to producing content across all genres and languages. We need to reach a resolution on the strike so that we can move forward. Bank of America Merrill Lynch analyst Jessica Ehrlich inquired, what progress have you made on password sharing, and when will the rollout be complete? Greg Peters replied, we've worked hard to develop a product experience that provides users with the information they need to make informed decisions, such as transferring profiles and viewing history to a new account, managing devices and account access, and purchasing extra memberships. We've balanced user considerations with making sure Netflix is paid for delivering entertainment. We've now launched this experience in almost all countries and are seeing positive results in terms of revenue and subscribers. However, the business impacts will roll in over several quarters as interventions are applied gradually and some borrowers may not immediately sign up for their own account. We live in over 90% of countries by revenue and will continue to iterate and execute the model. Bank of America Merrill Lynch analyst Jessica Ehrlich inquired, can you provide insight into the segments of borrowers who have yet to convert and how mobile devices may be impacted? Greg Peters replied, we're seeing a gradual shift in our product experience, with components of it rolling out over time. We're also seeing differential engagement across our borrower population, with some using the service daily and likely to transfer to their own account soon, while others are less engaged and require more convincing. This is why we expect to see the business impact from this product experience distributed over the next many quarters. Bank of America Merrill Lynch analyst Jessica Ehrlich inquired, what % of members have converted to paying plans and how many subscribers versus members are there? What kind of changes in plans have you seen? Greg Peters replied, generally, our members are well qualified and engaging with our plans at a high rate. This is reflected in their retention characteristics, which are similar to those of longer-term members. We prioritize converting the most engaged and qualified borrowers first. I won't comment on more specific numbers. Bank of America Merrill Lynch analyst Jessica Ehrlich inquired, could you please explain how much of the ARM growth is due to add-on members versus new subscribers signing up for higher-priced plans? Is it correct that ARM will accelerate in the second half due to password sharing? Spence Newman replied, in Q2, we delivered revenue in line with our expectations and are on track to accelerate that revenue in Q3 and Q4. Our primary objective is to drive growth through pricing, volume, and new revenue streams such as ads. We paused price adjustments in our big revenue countries during the paid sharing rollout, so most of our revenue growth this year is from growth in volume. Paid sharing is our primary revenue accelerator and we expect its impact to build over several quarters. UCAN is benefiting more from ads due to its larger advertising market, but it is still very small overall. Bank of America Merrill Lynch analyst Jessica Ehrlich inquired, what impact has dropping the basic plan had on ARPU in Canada, and what is the expected impact when it is fully rolled out over the next few years? Greg Peters replied, we've optimized our plan structure, pricing and features to give consumers access across a wide range of price points and to optimize long-term revenue. We've dropped the basic tier and those who would have signed up for it are either taking the ads plan or moving into the standard plan. We're rolling this out in an iterative fashion across countries to understand the impacts and ensure we're not surprised. The entry prices in the US, UK and Canada represent an amazing entertainment value and are attracting a healthy share of sign-ups. Bank of America Merrill Lynch analyst Jessica Ehrlich inquired, what differences in churn have you seen among new members or subscribers? Greg Peters replied, I would say that the members signing up are well qualified and have a good understanding of how Netflix works. They are exhibiting higher tenure retention characteristics, which is a positive sign. Spence Newman replied, Jessica, our average revenue per member, ARM, was down 1% FX neutral in Q2 and we expect similar results in Q3. This is mostly due to limited price adjustments we made over the past year in our big revenue markets in advance of rolling out paid sharing. Additionally, there has been some movement in plan and country mix shift over time, as most of our member growth over the past year has been outside of UCAN, in lower ARM countries. However, over the medium to longer term, we expect ARM to benefit from price adjustments, ads, and extra members. We are still early in terms of paid sharing impacts, including extra members, but this will build up over multiple quarters and demonstrate itself in ARM growth over time. Bank of America Merrill Lynch analyst Jessica Ehrlich inquired, could you provide some insight into the innovative advertising offerings you have discussed in the upfront? What are the advantages of these non-traditional approaches? Greg Peters replied, we have a lot of work to do to grow this business. Our priority is to increase our reach and scale, which we've done by growing our ads planned membership almost 100% quarter to quarter. We're also rolling out advertiser-facing features such as verification, measurement, targeting, and go-to-market capabilities in every country. Long-term, we want to create unique capabilities that blend TV with digital advertising and improve the user experience and ads experience. We're leveraging our core capabilities of UX testing, iterative development, and data-driven personalization to establish a leadership position in defining the premium ads experience on CTV. We're also exploring creative ways to give advertisers guaranteed participation in popular shows and films. There's still a lot of work ahead of us, but we're confident that all the fundamentals are there and that we can build a material ads business over the next several years. Bank of America Merrill Lynch analyst Jessica Ehrlich inquired, have there been any changes to advertising ARM since last quarter when you indicated it was at least $8.50? Spence Newman replied, Greg, our ad ARM remains higher than basic ad-free globally. We are pleased with our per-member ad economics and believe there is a great opportunity to grow our ads plan and offering. This will be beneficial for both our members and our business, though we still have a lot of work to do to reach our goal of material additional incremental revenue and margin. Bank of America Merrill Lynch analyst Jessica Ehrlich inquired, what has been the reaction to your initial upfront advertising performance in this tepid environment? Greg Peters replied, it's great to be able to connect with so many advertisers and understand their needs. The market is soft, but our small size gives us an advantage in terms of scarcity of inventory. We're seeing good demand and progress in the upfront, and our focus now is on adding features that meet advertiser needs to make our offering more attractive as we scale up. Bank of America Merrill Lynch analyst Jessica Ehrlich inquired, what resources and time are needed to build an ad tech infrastructure? Greg Peters replied, I would say that we have tens of engineers working on this project, and they are delivering features on a consistent basis. We are collaborating with Microsoft to prioritize what advertisers need, and we are making progress in a gradual ramp. Bank of America Merrill Lynch analyst Jessica Ehrlich inquired, what is the timeline for achieving scale with the tech capabilities in place? Greg Peters replied, we've seen impressive quarter-to-quarter growth of 100%, which puts us in a great position. We're constantly iterating and improving our reach and tech capabilities, and while we have a long list of technical features to work on, we're making progress and moving towards the innovative space. Bank of America Merrill Lynch analyst Jessica Ehrlich inquired, Spence, what is your vision for the advertising contribution? Are you rethinking the 10% of revenue goal given the decline of linear? Spence Newman replied, we have a lot of work to do before we reach 10%. We don't want to get ahead of ourselves. We believe it can be a meaningful part of our business, which is why we set the bar at 10%. We're investing a lot of effort, time, and resources into this, and senior management is focused on it. We're aiming to meet or exceed that goal, but we need to prove it out over time. So, let's give it some time. Bank of America Merrill Lynch analyst Jessica Ehrlich inquired, given the capabilities discussed, why do you think the pool of ad dollars will be limited to linear rather than digital? Greg Peters replied, I anticipate that over time, we will pull both linear and digital dollars. Currently, our focus is on linear brand-focused TV advertising, which is a great opportunity for us to capitalize on. We are building capabilities to expand our reach, but our priority is to target brand advertising. There is a lot of money available for connecting with great consumers, and we believe we can provide the solution. Spence Newman replied, Jessica, our goal is to create a model that is better than traditional TV. We are blending brand and digital dollars to achieve this. Bank of America Merrill Lynch analyst Jessica Ehrlich inquired, have there been any changes in engagement between tiers in the past quarter? Greg Peters replied, we're seeing consistent engagement across all tiers, with no changes over time. Our ads plan is also performing well, with good engagement. Ted Sarandos replied, streaming is growing rapidly, with 37% of TV time now in the US. We have been successful in this competitive space, consistently having the #1 show and film on streaming. This creates a great opportunity for us to capitalize on the consumer demand for streaming content. We must deliver high-quality content that viewers love, and monetize it through subscription and advertising. Greg Peters replied, "Our reach and engagement are key factors that make us attractive to advertisers. We have amazing titles, TV shows, and films that consistently rank in the top 10, which is a major draw for brands." Bank of America Merrill Lynch analyst Jessica Ehrlich inquired, "Could you please explain the underlying dynamics of your free cash flow in Q3, including content spend and other investments?" Spence Newman replied, "In our cash flow forecast for 2023, we've seen an increase driven by higher certainty in our forecast due to the success of the paid sharing rollout, some production timing changes, and the impact of the strikes. There is still a wide range of outcomes for this year, which may create some lumpiness between 2023 and 2024. However, we are past the most cash-intensive phase of building out our original programming strategy and expect a positive and growing free cash flow trajectory in the years ahead. We are also continuing to manage expenses responsibly, growing them slower than revenue to help us scale healthy." Bank of America Merrill Lynch analyst Jessica Ehrlich inquired, "What is the expected content spend outlook for the next few years, post the strikes?" Spence Newman replied, "We've seen our revenue slow down in early 22, so we've kept our cash content spend roughly flat since then. We expect to grow back to the levels of 22 and 24, with a 1.1 ratio of cash content spend to content expense. We anticipate revenue acceleration in Q3 and Q4, which will allow us to increase our cash spend on content responsibly. We have a lot of great entertainment to provide to members worldwide, and we believe there is a big opportunity to invest in." Bank of America Merrill Lynch analyst Jessica Ehrlich inquired, "Can you provide insight into how you plan to leverage your business model to drive growth and free cash flow beyond 2024? Spence Newman replied, "I expect revenue and profits to grow over time. We are past the most cash-intensive phase, and our cash spend to amortization ratio is projected to be around 1.1x in 2024. This should lead to healthy free cash flow generation for the foreseeable future." Bank of America Merrill Lynch analyst Jessica Ehrlich inquired, "What assets are you considering for M&A given the current distressed market in media?" Ted Sarandos replied, "We have traditionally been builders rather than buyers when it comes to M&A activity. We focus on acquiring intellectual property that we can develop into content for our members, which is our core strength. If there are opportunities that give us access to IP that we can develop, those could be very interesting." Bank of America Merrill Lynch analyst Jessica Ehrlich inquired, "Would you consider selling your library content to other companies?" Ted Sarandos replied, "We found that offering our content to our members on Netflix provides an incredible value. We've seen that when we put it elsewhere, either people already have a Netflix account or the viewing base is much smaller. We believe that offering our content to our members and having it available even after its original run on Netflix is the right course of action. The syndication and home video markets are contracting, so this is a great opportunity to please and thrill our members with our content. We've seen that when new seasons of shows come out, the previous seasons pop back up into the top 10. It's a very fluid and dynamic offering that gets better as our library grows." Bank of America Merrill Lynch analyst Jessica Ehrlich inquired, "What is your strategy for expanding into sports, including live sports?" Ted Sarandos replied, "Our position on live sports remains the same. We're thrilled with the success of our sports-related programming. Recently, we launched Quarterbacks with the NFL and a few weeks ago, Tour de France. These shows introduce a new audience to a sport that has been around for a long time but not well understood. We use storytelling to make it accessible and offer a variety of sports programming year-round. We're also experimenting with a live golf match in November, which serves as a promotional vehicle for our sports brands. We believe we can provide a strong offering for sports fans without having to be part of the economic model of live sports licensing."